from macro finance to more personal costs for higher education, they are climbing. In fact, there is more than $1.2 trillion in outstanding student loan debt in the U.S. It is the biggest debt that is carried by Americans aside from mortgage debt. Now, as an investor, this could be the last place you would think to get your money back. Here to prove me dead wrong on that opinion is David Klein. He is co-founder and CEO of CommonBond. David, glad to have you with me.
Thanks for having me.
So how can investors make money from student loans? I have had people telling me if I could short the student loan market, I would. You take the opposite view.
Well, at CommonBond, we focus on a creditworthy borrower set who, if underwritten, can provide financial returns to investors with very low underlying risk. So we've been around now for about 2.5 years. We've been at national scale for over 1.5 years. And in that time, we've yet to have a default. We haven't even had a delinquency. And so when investors come onto our platform and essentially invest in these student loans, they're doing so with a very strong return and very little risk.
So that sounds amazing. How much is the low interest rate environment helping you? And if those rates go higher, what does that change for you?
Sure. So I think as rates increase, there's an expectation on both the consumer side and the investor side that rates for the consumer will increase and return expectations for investors will increase as well. Another thing that I think is important to mention is that our medium-term and long-term strategy has much less to do with a particular asset class, which is student loans, and a lot to do with our borrowers. So our borrower, on average, is 32 years old, making 6 figures a year, and has a FICO of 760 to 770. And that's a borrower who will have financial needs that evolve over time, and we'd love to be able to serve them.
So is it essentially, how did you build the algorithm? Did you go in and just pick out, I'm asking you, I'm not just, like the law school students, the med school students, how do you know these are lower? I mean, I heard you say FICO score, but the 6 figures implies that they're on a pretty professional track.
Right. We have focused to date exclusively on graduate degrees. We started at one school, Wharton Business School, which is where...
It's a pretty safe bet, I think.
It's a relatively safe bet, but that's where we all met as co-founders while MBA students there. And so we said, let's start somewhere specific with limited scope. Let's prove out the model and let's expand from there. So we've expanded to 20 schools, then 50 schools, then 200 schools. I wouldn't be surprised if by the end of this year we're in a few thousand schools.
David, what has been the biggest surprise to you as you've formed CommonBond?
You know, I think it has more to do with business building than it does in investing. I think people are absolutely critical. What I would say is that if you're maniacally focused on being methodical with growth, what tends to happen is that as you continue to grow, that partners around you, whether it be on the customer side or the capital side, begin to trust you more and more.
Okay, words to live by. David Klein, glad to have you with us. Thank you very much, co-founder and CEO of CommonBond.